Hey, it's Melissa Harmel with eXp Realty, and I am here with this week's things that you need to know. We're calling this What's Up Wednesday. What's on everyone's mind right now? Well, where's the economy going, and how is it going to ever recover? I've got some information that I wanted to share. Starting out, this is what the major financial institutes are calling for the second half recovery. They're really predicting that by the fourth quarter, we are going to be in a positive economic recovery. Now, you've heard about the U, the V, but an L recovery is when the economy goes down and it stays down. And that's not what we want. The good news is no one is calling for that. So when we look at what's being said out there on the media, the experts are saying, hey, what's going on? According to Sam Cather, the chief economist at Freddie Mac, he's really predicting that we're going to see a forward recovery in 2020, starting in the second half. So that is coming up pretty quick in June. What's really exciting is this slide was just created by a company that I do some business with. And what they're sharing with us right now is that percentage of home ownership with equity positions. So 42.1% of Americans own their homes free and clear. So when we think about what happened in 2008 with the mortgage meltdown, this is great news for the United States because homeowners are not using their homes the same way they did in 2008, like ATMs. And what's really encouraging too is that 16.66 own more than 60, have 60% or more equity in their homes. So this is a sizable number and we're super excited by this. Homeownership rates have increased over the past few years. Of course, we did see the most homeownership rates back in the 2003, 2004, pretty much when anybody could qualify for a home. Then we saw it go down, 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 and now we've seen it back on a steady increase. And at the beginning of this year, we were seeing quite the impact of homeownership. Why are people buying homes instead of renting? Well, this chart should tell it all. Median asking price for rent has just skyrocketed since 1988. And people are tired of paying rent when they'd love to own, put paint on the wall, fix up their house, and not have to pay a landlord's mortgage. So 58.7% of all Americans have at least 60% equity in their homes. This is super encouraging. And so even though we've had this crisis and even though we've had an economic downturn, the housing market is not going to crash. This is really good news. So what about all these job losses? This is the national statistics, where basically it shows that we did see a peak in unemployment filings, and then we've actually seen a downcrease. So we're seeing it steadily go down. These are definitely higher than January of 2020. However, we are starting to see it go down, which is very encouraging. Now, what I thought was super interesting was that the number of unemployed, 33% or more of the unemployed are actually servers and bartenders. That's really concerning. So I hope that you've been out there trying to do DoorDash, stopping by some of your favorite local restaurants and at least doing takeout, things like that. We need to get those people back to work. And when they do get back to work, let's just tip them extra special for a few months, because you know what? They've really been hit hard. They're the hardest group that's definitely been hit by this COVID-19. What I thought was interesting too is that only 14.7% of the population is unemployed. and only 10% of that group thinks that it's permanent. 90% of the unemployed feel that it's just a temporary glitch in the system and they will be getting back to work. Now, I think what's interesting with this chart too, if you look at it, 31.9% of teenagers are not employed right now. Well, that's because we told them they have to stay home. And so consequently, hopefully with soft openings throughout the United States, we're actually in phase 2 here in the Anchorage area. So we're actually starting to see things open up, which is great. And so consequently, we should see some of those teenagers get to work, which would be really encouraging. I know for parents, it would be great to get them out of the house and think how these teens must feel by not being able to even get a little cash spending money. Now, what we have to think about for in Alaska is that currently 15% of our fellow Alaskans have filed for unemployment. Well, if we look at the national statistics, they're at 14.7%. So we're right about at the same grouping. What was also interesting is for the very first time ever, the week of May 8th, the non-traditional worker was allowed to actually file for unemployment, and 15,000 extra people filed for unemployment benefits. The week of May 8th, because they were actually non-traditional workers, typically self-employed people that now have been allowed to actually ask for unemployment. So that's a very interesting number. So again, we're at about 75,000 people, fellow Alaskans, that have actually filed for unemployment since COVID-19. What's going on with home sales? Let's take a peek. Housing supply remains at historically low levels, so house prices growth is likely to slow, but it's not likely to go negative. I think that's encouraging. Now, this is the chief economist from First American, who actually is hooked up with CoreLogic, and they actually study a lot of details behind the scenes, which is really great because they really do have a pulse on what's going on in the economy and in housing. So if we look at it just from our little tiny part of the world, in Anchorage, pending sales, we've seen an increase from last year. Now in the Valley, not so much in single family homes. What's interesting with condos in Anchorage, we've seen a decrease in sales. However, with land and with multifamilies, we saw an increase. There's not a ton of condos out in the Mat-Su Valley. However, they saw a 30% increase in pending sales from year to year. And we saw a decrease out in the Valley for multifamily and land sales. What's going on with home prices? So year over year, pre-COVID, and right now we're at about a 4.5% increase in pricing. So it has been a seller's market, and we have been seeing an increase in pricing steadily over the last few years. The forecast, however, does say that we're not going to see such a great increase in pricing. So that means that prices are going to hold steady for what they are right now and what they were earlier this year. Existing prices year over year by area, as you can see, the only places that have really seen a downturn in pricing is land, both in Anchorage and the Valley, and multifamilies in the Valley. Otherwise, we have seen a 10% increase in pricing with single family residences just here in Anchorage, and a 6% in the Valley. So when you're in the seller's market, you end up with multiple offers on properties, you end up with paying buyers willing to pay a little bit more, and appraisers are willing to appraise the properties for what the buyers and the sellers have agreed to. I haven't heard very many stories of buyers having to write checks for more than what the property's worth, but we have seen kind of a bigger increase than what they've seen down in the lower 48. Housing inventory. What's going on really with housing? Is there enough on the market? Is there not enough? So according to National Association of Realtors, which the acronym NAR, down at the bottom of the slide, Alaska is a strong seller market. Now, why is that? Well, you just saw that, pricing. We also too have always been a strong market, and I think it's very interesting that the rest of the United States is not in such great shape. However, one of the things that we're definitely seeing, which keeps that market strong for a seller, is that we are seeing a lack of inventory. You might hear that word. Well, that means that we haven't seen a lot of new listings come on the market. So in Anchorage, we are 14% down from what we saw last year in listings, 15% in the Valley. In condos in Anchorage, 17%. In the Valley, 5%. The only place that we've seen an increase in new listings in Anchorage is in land, and then in the Valley in multifamilies. We've seen a 12% increase in listings from year to year. Months of inventory. Now I just did the Anchorage single family residences, months of inventory, homes for sale on the market. Now what does this mean? You might hear it called the absorption rate, lots of things that it can be called. The bottom line is, how and what does this mean? When we have less than 3% months worth of inventory on the market, typically indicates a seller's market. So as you can see, we were sneaking up into a buyer's market over the summer and into the fall, and then we took a decrease down back into a seller's market. So oftentimes in Anchorage, we see just a flood of properties come on the market, May, June, July, August. Hence the reason we end up with higher months of inventory. It'll be interesting to see what the statistics show this year, because we definitely are not seeing as many homes on the market right now as we did at this time last year. In Eagle River, what happened in February, we saw a whole new group of properties come on the market. So we actually kind of went up a little bit over. It started becoming a buyer seller's market, back and forth, kind of what we call a neutral market. And then all of a sudden properties didn't go on the market because, again, we had COVID-19 and the military was put on a freeze for no movement. PCSing was put at a halt for 60 days. So what we're seeing right now is we actually have had that lifted, and we're starting to see families moving that are military families. And so we're starting to see more families PCSing into the Anchorage Bowl area to go to work on base out there at JBER. So it'll be interesting to see what this looks like in a month, to see what the months of inventory for homes on the sale are. And right now, that means that Eagle River still is in a seller's market. Buyer demand. Are there any buyers out there? People are asking me that question every day when I'm talking to sellers. So home buyers are coming back on the market. It did plummet in the past month due to the coronavirus. Well, we were told to hunker down and stay home. So this is what happened to showings. Well, that makes sense because we were told to hunker down and stay home. Now we have just a little bit of a different style of showing. And if the property is occupied, we do ask for a health questionnaire now, so that we make sure that the buyers can pass a health questionnaire as well as the seller can pass a health questionnaire, so that we're not cross-contaminating people. It's just an extra little form, and it's just a cautionary task that we should all be taking right now. So as you can see, showings are really going up again. Foot traffic. This is so interesting. This was put together by the National Association of Realtors, who actually takes it from programs like Showing Time and MLS and statistics that they gather from all different sources. But if you notice that in February, buyers were super excited, and buyers nationwide were seriously out shopping. And when we had properties on the market in February, we did see a lot of foot traffic, and we saw quite a bit of offers. So this was good news. And then all of a sudden, bam, took a hit. Showings really went down. Well, because we were all told to hunker down. Makes perfect sense. Now that we're not in that, and we're actually in phase 2 in Anchorage, we're actually seeing a lot more buyers out there shopping. Interest rates. What's happening with those? Well, as you can see, they keep going down. So right now they're at 3.26 according to Freddie Mac, a 30-year fixed rate. And so rates remain really low, which is always good for the economy and good for buyers. They're predicting that mortgage rates are really going to stick right around there. Charts did not look like this at the end of 2019. They were predicting that rates would go up more in the 4s to 5s. Obviously, we're not going to see that, and they will most likely keep rates low so that we can have a movement in the economy. So this is really an opportune time to think about buying. When interest rates are this low, this is just a great time to seize up on taking advantage of that. Average days to close a loan. So again, sometimes people are like, how quick can we get into a house? The typical days to close a loan is about 45 days. So again, that's from the date that you go get pre-qualified till you actually identify your property and get it under contract and closed. So one of the first steps is to talk to your mortgage loan officer. If you need help with finding a mortgage loan officer, I can hook you up with somebody locally. I work with somebody at every one of the local banks, as well as some mortgage brokers, and of course nationwide lenders, just one that fits you best. So if you need help with finding a mortgage loan officer, just give me a call. FICO score requirements. Now, why is this something that we need to talk about? Well, when COVID happened, the mortgage industry kind of froze for a minute, and some investors raised credit score requirements. So that required some buyers that had been on the fence with a little bit of a lower credit score. Some of those buyers weren't able actually to close. And so every day is a new adventure for mortgage loan officers. If you know one, you should just give them a big hug, because they have really been through the trenches in the last couple of months. So the FICO score does affect the purchasing power of the buyer. So when we raise FICO score requirements, that means that the buyer has to be in a better credit position. What's interesting is 49.7% of FICO score are less than 749. So what does that mean? That means that we have a lower pool of buyers that are actually qualified. So I do work with lenders that specifically help buyers improve their credit scores. So if that's something that you would like to discuss, obviously the higher the credit score, the better the loan package that you can get, the more investors that are interested in lending to you, as well as the better interest rate you'll get. So definitely call me or email me, and I can get you hooked up with somebody who actually specializes in helping you boost your credit. Even if you're at that 749 and you want to get closer up into the 790s, give us a jingle, because I can sure help you with that and get you hooked up with the right lender. So what I thought was interesting too is this is an explanation for some people that are not understanding the difference between a buyer that goes FHA versus VA versus conventional. And we did see some unfortunate things happen to those buyers that were looking at buying that were qualified for FHA home loans, because FHA had dropped their credit scores a little bit low. And when the whole COVID-19 pandemic started and the government decided to shut down and we all were kind of on hunker down lockdowns, they raised the credit score requirements, which pretty much kicked some people out of the home buying process. I know those lenders are strategically working with those buyers to get their credit scores up so they can buy here in the next few months. Again, it's just a process. Things just started we had to have a little slowdown for some things and take a peek at some things and help some people differently than we had before. So if you have any questions, please feel free to reach out to me. We can chat. Here to help. I'll do this weekly Wednesday What's Up little live video for you guys so that we're all talking about some things. I'll add some different things every week. Next week, we're going to talk about digging down a little bit deeper into different zip codes to see really what's happening in those. Because we do have pockets of Anchorage that aren't necessarily as popular as other pockets. You have pockets of the Valley that aren't as popular. So are they in a seller's market or are they in a buyer's market? And why does that matter to you when you're looking to buy a home? It matters. So tune in next week and I'll see you there. Have a good day.